Okay, guys, so welcome to another live analysis session. Now, I will look at the other things in the market, but I want to present to you guys a very important opportunity, which I think is coming up very, very soon. Now, my schematics here are very simple. I try to keep it as simple as possible always, but there is a great opportunity I see coming along, which if you want something to capture in this next period of time, I would definitely say to invest some time to look into the Swiss franc versus the Japanese yen. So to break the chart down very simply here, on the daily time frame now, you know what? Let me pull up a completely fresh chart so we can see things from the beginning. All right, so why am I so big on this pair right now? Well, aside from the fundamentals of the Swiss franc, I'm going to start off with just purely the technicals of what we have. So at the moment, from the buyers, when we're looking at this from the monthly, we are quite strongly bullish on the Swiss franc versus the Japanese yen. However, we've entered into a region here, which I want you guys to observe now. The charts tell us a lot about history, and it demonstrates history for us because money and economy is integral to every part of history. And when we look at the price, we can see what happened in life. So I'm going to start off here with a very important point in history, which is right here. Now I use my crosshair, and there's this candle right here. Now it's on the line, which means it's January, and this is January of 2015. So what I'm going to do is I'm just pointing arrow here. I'm going to create one quickly. And let's talk about this. So this candle right here is a piece of history right here. And this is the Swiss franc crash. All right, I'll call it that. Now, what is the Swiss franc crash? Now, if you're not too sure what that is, I want to just let you into a little bit of history here to understand the gravity of what I'm about to say next. So this Swiss franc crash here, okay, was caused by the depegging of the euro from the Swiss franc. Now, the reason for this depegging has a lot to do with the issues that were going on. Now, if you're not too sure what price pegging is, let me just give you a bit of insight into what's going on here. So price pegging, all right, by definition, I'll give you my Michael definition for price pegging, is a very simple concept, and it's usually used in tandem when it comes to relationship, when it comes to import and export relationship and trade. Okay, let's put this properly, the exchange rate of two currencies are artificially looked at. And I'm going to need more space because you all know how MetaTrader is. So price pegging is when the exchange rate of two currencies, it should be IES. So let's get the grammatic correctness here. So when two currencies are artificially locked at a set, all right, predetermined price. All right, so this is what price pegging is all about. So price pegging is a very important concept for you to understand in Forex. Now, it's not talked about very often because in order for you to be able to trade Forex, the price can't be pegged. If it stays at the same place all the time or in a very small range, then there's no point of you trading it because you're not going to make any money. So price pegging is not a topic that comes up very often. However, when you talk about the Swiss franc, then you're talking about price pegging, because on every Swiss franc pair now, just to show you what I mean, if I go to any Swiss franc pair here, so let's see if Euro Swiss franc is here. There we go. So here's Euro Swiss franc. If I go over to the weekly time frame here, you can see this massive crash here in the price. The price in this week here and the week after dropped by 2,235.4 points, which is an absolutely crazy drop. And if we look back in history beforehand, all right, here is the region of price pegging. So from this point right here, I need to take this off. Scroll back a little bit. If we go back from over here, this period of time between 2012 over to 2015, just the beginnings, this is the price pegging. So I'm going to write this here on Euro CHF. This is the price pegging season. So with price pegging, it's almost impossible to keep the price at the exact same rate. So price peg So this is the price range for it, okay? So we see that the floor of it, or what we call the peg-in floor, starts around about here. And then we see the price getting up to some highs over here. But essentially, if you were trading this, it would be very difficult for you to make much money on here because the price, especially for something that's over many years, has hardly done anything. Okay, and this peg was set in place to keep the price favorable for the import-export relationship that the European Union and Switzerland have. Okay, so what we're seeing here is this price pegging situation. So the reason, I put it here, reason for Euro CHF price peg. I'll put this here. The reason for it was to keep prices favorable for trade. All right, that's what it's for trade. All right, now if you didn't know, Switzerland's biggest trading partner is Europe, okay, because of the proximity to Europe. Now, Switzerland itself, of course, is not a part of the European Union, all right, but it's still in the European Economic Area in the sense that they still trade with European countries who are within the EU and whose countries are backed by the euro. So, in essence, when it comes to the trade relationship, approximately about 52 to 54% of Switzerland's exports, or how they generate revenue from their trade or from their products and services, goes out to European countries primarily. Okay, so famously things like Swiss watches and Swiss knives and things of that sort, okay, go to Europe. Over half of it goes to Europe. The rest goes to other countries in proximity, and then to the far and wide reaches of the world. All right, now why am I talking about this? Well, the demand zone, or the order block responsible for this movement, is right here. So on Swiss franc, Japanese yen, all right, now when the decoupling happened, now the full history of what happened is very long to explain, but essentially there was unrest within the country of Switzerland because the price peg was affecting people who were holding Swiss francs, okay, because the amount of foreign deposits that were coming into Switzerland, okay, from other countries, meant that the Swiss franc was stronger than what it was pegged at, and so people were not getting the earnings that they deserve, and etc., especially the rich, and so there was an uproar. And then until the bank was pressured to do it, and when they did, it was at a time where they didn't hardly want anyone. Now, a few brokers knew, but many brokers went out of business from that one spike. So it was a very, very detrimental situation to many people and different people. If you're on the right side of that, you could have literally possibly even been a millionaire in that movement. And things like that in history only happen ever so often. Now, why is this such a major point to me? And I'm bringing this up to you right now. Well, with this Swiss franc crash of 2015, the order book responsible for the bullish movement before the crash, all right, is this area right here. Now, this zone right here is a demand zone. This is a monthly one, but it is a demand zone. As you can see that even after the crash movement, the price returned back in here and used this area to go for a long. Not as high as the highest point we saw, but still went long. Now, we had a break beneath this into 2016, and we haven't returned into this area until May of this year. So it's taken 7 years for the price to come back to this area. So because it's taken 7 years here, we have a significant demand zone flip. All right. So in other words, the price has become a supply zone reoptimization. Okay. So we've had supply reoptimization here. Now, where is the money in this movement? Now, although the market structure is bullish here, if I start from the largest swing from A to B, here is the A swing right here. All right. So here is A, and the highest swing on the upside is B. Now, if you're trading this from an institutional side of things, if I put this Fibonacci here, the price is still very much in premium pricing in terms of if your institution was to buy any Swiss franc or Japanese yen or vice versa, whichever way. All right, we're still very deep on the premium price of the market until we drop beneath these areas beneath here. And so that means there is an opportunity for at least, if if not more, the price to get back to this demand zone area here. Now, why I'm watching this area in essence is because, first of all, we have no return here. We've had no return to demand. And this is why when the price returned down here in 2016 and not entering into this demand zone, the resultant, we had a strong movement afterwards, but really for the next 2 to 3 years, the price has really been in a range. Okay. Not the most, I wouldn't say the tightest or smallest range. It is still quite an expansive range, but the price has been in a range for quite a while. And until we've got here. Now, my expectation is the price to give us a drop here. Now, what I'm saying is actually very crazy, because I'm actually saying that in the next year or two or so, that the Swiss franc versus the Japanese yen should give us a Swiss franc Japanese yen of 100 yen. So 1 Swiss franc equals to 100 yen. At the moment, it's at 119. Now, why am I so big on this trade, and what's the opportunity here? So let me open up another chart here. So keep this in your mind as to what I'm saying. If I go over now to, let's start from the D1 here. On the daily structure, what are we looking at? So on the daily structure here, we see we had a very strong bullish piece of price action that has spanned over 35 days. If I use this here, you can see that it took 35 days to go long. Now, after the price got to this point right here, above the highs of May, and this is June we're talking about, we had a very strong short, and this short only took 3 days to happen, just 3 days. In 3 days, the price swallowed up 35 days of bullish liquidity, which lets you know. Now I'm going to place the monthly zone here so you can see the gravity of this, which lets you know that basically we're in a very strong area of bearish pressure at the moment. Okay. Now it seems conceivably in the middle of nowhere, because we've had a very strong bullish trend nonetheless. Since, to be honest, the year 2000 up to now, the price has been going strongly bullish, but I see the opportunity for a very strong short before a continuation in the opposite direction. So where are we right now anyway? So on the weekly time frame, which is not important at the moment, I want to go straight down to the daily here. So on the daily, again, this is where we are. And with this massive drop here, we've had a break of market structure. Now, if I was to draw a trend line here, there's a break of the trend line structure, but I don't use trend lines to trade. So I'm going to use the swing low nearest buy, which is here. We've had a break of the market structure right here. Now, this break of market structure that we've had is going to require the price to return to a suitable area of supply, which would be this supply zone right here. So this supply order block, which originated the move, would probably be the best place for the price to return to for a short. So why am I saying this? Well, in a few days from now, or in a few weeks from now, I would say for you guys to look out for a position here. If we get an entry right here with stop losses above the zone, I believe we will see one of the greatest shorts we've seen on Swiss franc Japanese yen for a very long time. And I'm really geared up, ready to see what happens with that. Okay. I really am. So at the moment, the price is giving us signs that it possibly wants to reverse. And we've even had a break of market structure here, right here. And the price has actually right now, as I'm talking, has returned back into the demand zone that created the move. And so the price is giving possible very strong buy signals for us to go for a long. Now, this opportunity to me is very powerful. The supply zone, which is supporting the move, we've had a supply zone which the price is broken above. And so it's returned and used this for demand. And so we've had a perfect structure here where we could see the price give us a 320 pip move before it goes short. So before the long, guys, or before the major short, there is a long, and the price is showing signs of good activity here. So I'm going to end this off very simply. I'm leaving this opportunity out here. You know, I know that there is a chance for some crazy move, and I believe if I don't say it, it won't be fair on you. So if I go over to the H4 now, let's go to the H4. So on the H4, we have a bear trap here. So we have a trap of bearish liquidity and the price is pushed long. Now notice carefully, we've had these lows being created here. So 1, 2, but the price wasn't able to really take off as it should do, even though it came quite low back near to where we were. And in reality, it is inside of that bullish liquidity I just talked about. But just this week, for the first time, guys, we have a full return into this area of demand. So what I should be looking for and what you should be looking for would be any opportunity right now to capture a long. All right. So I want you guys to keep your eyes peeled. I'm watching very carefully here. I'm not buying just yet, but from the looks of it, we're in an optimal prime area for a buy. All I'm going to be watching out for is to see how the price behaves around these lows across here. All of these pools of lows. Depending on what the price does probably into tomorrow, we should be looking for a very strong move long. So if I were you guys, Swiss franc Japanese yen is probably one of the greatest opportunities for a long and then for a short that we've seen in over 7 years. And that's it. I'm done, guys. There's nothing else to say. I hope you guys enjoyed that. Very short and straight to the point. It's the shortest live I've probably ever done. But I just wanted to break this down for you guys to see the gravity of the opportunity here. So leave your comments below. Let me know what you think. If you've seen something similar,